Welcome back. We are watching the implications and next steps as the U.S. has begun an Operation Epic Fury on Iran. We are turning to the investment outlook here and the word on Wall Street. Top investors watching your money. Joining me now is UBS financial advisor Ryan Lynch. Also with us is KERUX Financial Chief Investment Officer David Laut. David, thanks very much for joining the conversation. Always good to see you. Ryan, I want to get your take on the state of affairs. Markets this morning selling off. The Dow Industrials down 576 points as the Nasdaq sells off 360 and oil prices spike. Oil right now up about 8%, both crude and Brent up as traders are reacting to fears of Iran supply disruptions. Tanker traffic through the Strait of Hormuz effectively halted due to the Operation Epic Fury, raising concerns about a major global oil choke point. Of course, this waterway is where 20% of global oil is transported every day. President Trump is signaling that this could continue for 4 weeks. David, your reaction?
Yeah. First of all, I just want to say that my prayers are with the people of Iran, our warriors who are fighting, and that God's will would be done. Other than that, of course, oil and a lot of the things that have been working already this year continue to have momentum because of the recent actions over the weekend. And so investors are weighing, where do we go now? And we're kind of caught between technology stocks selling off, probably not completed there, and then some of the value opportunities now being more expensively priced than they were 3 months ago. And so one of the things that I might be pointing investors to as an opportunity is potentially looking at things like minimum volatility products that would give them a diversified opportunity to take a more defensive approach to the market until things settle out later this year.
Okay, so you want to take to the sidelines then in terms of this sell-off?
I'm not going to the sidelines. The nice thing about being in that type of investment strategy is you're taking out the higher flyers from your portfolio and allows you to continue to be invested, continue to be diversified, but maybe not be overly oriented to technology, communication services, and some of the more growthier sectors of our market.
Sure. And Ryan, it's the growth sector that, of course, was in the lead throughout 2025, but we've seen a bit of a rotation in 2026 as investors are selling some of these big hyperscalers. OpenAI secured $110 billion in new funding, valuing the company at $730 billion ahead of a planned IPO later this year. Amazon investing $50 billion, SoftBank and NVIDIA committed $30 billion each as OpenAI deepens its ties with Amazon's AI chip and cloud business. SpaceX is also going to be a huge deal. It's weighing a confidential IPO filing this month, potentially setting up the largest public listing ever. The company seeking a valuation of $1.75 trillion with a possible IPO in June. Your thoughts, Ryan?
Well, certainly, anytime you see this type of economic activity, it's a good sign for markets, broadly speaking. So, what we're seeing is that these deals are really validating AI's importance. It's also validating that the capital is starting to shift towards infrastructure and scale and not just software. So really what we want to look at and continue to see is capital shifting towards asset-heavy, strategic infrastructure. We've favored space, defense, power, and AI-adjacent industries moving forward. So this is honestly something that we've been looking at for a long time. We think it's a good thing, broadly speaking. It's another reason why we like financials as well. We're starting to see more deal flow, more IPOs. So hopefully this is a good sign for the economy moving forward in markets.
And with oil prices spiking, Ryan, are there opportunities there right now? Oil up 8% this morning.
Yeah, so oil jumping up right now, we're seeing more of a systemic shock, not a systemic shock, like a short-term shock. It hasn't become economic yet. So typically, spikes like this are more short-term and transitory in terms of inflation. There certainly will be opportunities. I think the longer-term view is if this goes longer than 4 weeks, if the strait is shut down, you mentioned 20% of the world's oil comes through here. Yeah. That's where all of a sudden this will become more of a long-term issue. Right now, we think that it's a short-term spike. It should come back down in terms of oil prices back to the 60, 70 range.
Okay, we'll leave it there. Ryan Lynch, David Laut, thank you very much, gentlemen.